Listen up. This could be the most important week of your money in years. Why? Because all eyes are on the Federal Reserve. We're talking about Tuesday's retail sales data, Thursday's jobless claims, and most importantly, Wednesday's Fed rate decision. And let me tell you, markets are betting this could be the very first rate cut of 2025. Do you realize what that means? Every single time in history, 20 out of 20 times, when the Fed has cut rates while the stock market is at record highs, stocks have gone even higher in the next 12 months. Not sometimes, not most of the time, every single time. But here's the catch. This cycle is different. Bitcoin is in the game now. We've got ETFs, we got Wall Street money, and we got a halving already behind us. So the question is, are you going to sit on the sidelines or are you going to position yourself for the biggest asymmetric move of our lifetime? What's up, family? It's Coach Massey, and you're locked into the Daily Huddle. This is where we cut through the noise, talk truth about Bitcoin, finance, and the economy, and give you the real breakdowns you're not getting on mainstream media. Do me a quick favor, though. Smash that like button, hit subscribe, and share this with somebody who loves Bitcoin news as much as you do. Because today's episode is stacked. All right, let's get into it. Tuesday kicks us off with August retail sales data. This is the pulse of the American consumer, the backbone of the U.S. economy. Over 65% of GDP comes from consumer spending. If retail sales are hot, it means Americans are still shopping, still swiping, and still borrowing. Even with credit card debt at all-time highs and interest rates above 20% for some of those accounts, oh man. But if sales come in weak, that's a red flag that households are tapped out. And when consumers tap out, recessions follow. Now, I think we've been in a rolling recession all this time, but we'll see if it really gets called a recession. Here's why it matters, though, for Bitcoin. If sales weaken, the Fed has even more reason to cut rates quickly. More cuts mean more liquidity. And while stocks may benefit, Bitcoin, because of its fixed supply, reacts like gasoline on a fire. So what to watch this Tuesday? It's not just a data point. It's a signal of how aggressive the Fed may go in the months ahead. We might even have 50 basis points this week. Now, Wednesday is the heavyweight fight. The Fed rate cut decision plus Jerome Powell's press conference. Markets are leaning heavily toward the first rate cut of 2025, usually about 25 basis points. Think about that. In just 2 years, the Fed went from the fastest hiking cycle in history to hitting the brakes and pivoting back to easing. And here's the part most people don't get. This pivot is not about you. It's not about your rent, your mortgage, or even your job. It's about stabilizing Wall Street and the Treasury market. That's at least my opinion. History tells us what happens next, though. Every single time of the last 20 times the Fed cut rates are at records high during the stock market push, the stock market continues to fly. On average, we're talking about 14% S&P 500 rallies. That's a powerful tailwind. But this time, Bitcoin is fully in the mix. Spot ETFs are live, institutions are buying, family offices and pension funds are quietly allocating, and we're doing this post-halving. We now have a supply that's cut in half because of that. In combination of all of that, this makes a Bitcoin history play for sure. So when Powell steps up to the mic on Wednesday and confirms a cut, or even hints at more coming, the dominoes start to fall. And Bitcoin, well, it's the fastest mover on the board. So Thursday, we get initial jobless claims. Now, this is a weekly number, but it carries big weight. It tells us how many people are filing for unemployment benefits for the first time. If claims are rising, it means the labor market is weakening. And when the labor market weakens, the Fed has political cover to cut deeper and faster. If claims stay low, Powell can be cautious. But let's be real. The Fed doesn't care about workers as much as they care about markets. Every rate cut is designed to juice assets, not wages. And who benefits from that? The people who already own assets, like you and me, I hope. That's why today, the bottom 50% of the U.S. households hold just 2.5% of the nation's wealth. Meanwhile, the top 10% sit on the majority of assets. When the Fed cuts, the wealth gap grows even larger. So, this is why I pound the table on Bitcoin, because unlike stocks or even some real estate, you don't need to get rich. You don't need to be rich to get in. You don't need a Wall Street broker. You can just stack sats at $10, $30 on your phone every day and own a piece of an asset that benefits directly from the Fed liquidity. That's the lifeboat that people are hoping to get on. It's time to funnel wealth towards Bitcoin. Here's the big picture. Stocks might rally 14% after this cut. Sure, that's good, but it's average in my opinion. Bitcoin isn't average. Bitcoin is asymmetric. It's global. It's scarce. And it's trustless. There's no government owning it. Think about it. When the Fed adds liquidity, more dollars chase a capped supply of Bitcoin. That's why in previous cycles, Bitcoin hasn't just gone up 14% like the rest. It's doubled. It's tripled. It's quadrupled. It's rocketed up. Now, add today's factors in. ETFs bringing in Wall Street money, having already reducing new supply, geopolitical instability pushing people toward hard assets, institutional adoption at scale. This is the first true cycle where Bitcoin sits shoulder to shoulder with traditional assets. And history suggests asymmetric upside like we've never seen before. So here's the deal, family. This is not financial advice, it's for educational purposes only. But if you look at history, the Fed's moves create wealth for asset owners. If you're not in the game, you're left behind. That's my opinion. The strategy isn't complicated. Stay disciplined. Stack consistently. Don't get shaken out by the noise. Understand that cycles create opportunity, and the Fed just told us they're about to flood the system with liquidity again. There's literally $7 trillion just held up in cash accounts. The question isn't whether assets will rise. The question is whether you'll own them when they do. So here's my challenge to you. Do you think Bitcoin will outperform stocks after the Fed rate cut? Or do you think Wall Street still keeps the upper hand this cycle? Drop your thoughts in the comments. I want to hear from you and what your take is. Now smash that like button, hit subscribe if you haven't already, and share this with people who love Bitcoin news. Let's spread the word and keep this community growing, please. So I thank you for being here. I appreciate it, and I'm so excited for these upcoming events this week. Anyways, that's your daily hodl. Stay sharp, stay disciplined, and as always, lead, pray, hodl. I'll see you in the next one.